yesterday, but it's been a volatile start to the year, to say the least. The S&P 500 was down as much as 10% year-to-date just last week. The TSX has fared a little better, down about 2% so far this year, although it was down as much as 9% last month. So for those investors seeking a little safety, a little stability, where should they look? Joining me from Ottawa today is Peter Ashton. He's Vice President at Recognia, a firm that specializes in quantitative and technical analysis. Peter, always great to have you with us. Thanks for joining us.
Well, thanks very much, Kim. Thanks for having me.
Before I start, I have to give you kudos. The last time you were on, I know that we had some viewer feedback on one of the calls you made on a stock, Rite Aid, and they were just wanted to give you applause. So first off, applause to you. You did a fantastic job. Make a good call there. I want to get to some specific names that you think are interesting. But before I get there, too, volatility. I mean, it's back, and it's back with a vengeance. Do you expect to continue?
Well, it's always hard to make predictions about the market, but I think if we look at perhaps the market behavior over the last 6 weeks, we can make some observations. You know, if we look at the volume in the market, both in Canada and the U.S. over the last 6 weeks or so, what we see is that the biggest volume days we've seen correspond to really strong down days in the market. And what that tells us is that this is not strategic selling, it's not portfolio rebalancing, this is fear driving this selling. Investors are fearful of future rate hike increases, they're fearful of a potential recession, they're just unsure about the general direction of the market, and fear is a very powerful emotion. So as long as investors are fearful of these kinds of things, we're going to continue to see this kind of volatility in the market.
You know, I think it's often hard when you're the one experiencing it, but, you know, in fear there can be opportunity at the same time. And I know a lot of people are looking at different ways right now to protect their portfolios. Is this the time, do you think, to look at some specific defensive plays?
I think absolutely. I mean, I think defensive plays, have a place in an investor's portfolio all the time. And, now especially with the volatility we're having, people who are concerned about this short-term volatility may sleep better at night actually having some more defensive stocks in their portfolio. All
right, you've got a few names for us. So let's get to some names that you like right now in that defensive category. And the first one for us, I think, is Hershey.
Yeah, so Hershey is certainly a very well-known company, and in fact, this is in a sector we call the consumer staples sector, and in fact, 3 of the companies we're going to talk about today are actually consumer staples. So these are stocks that tend to do well in all different kinds of market conditions. So Hershey has a very strong brand, and as Warren Buffett would say, this is a company that has the power to price. And as a result, they've had a great track record over the last 10 years of growing their revenue and earnings. The company has a very nice dividend, a 2.6% dividend yield. And over the last 6 weeks, whereas the markets have been down overall, Hershey's actually been able to actually grow the stock price by about 2.5%. So the stock has been able to resist the market downtrend, and that's a very attractive capability in this kind of market condition.
I guess that resisting that market downtrend is also a lot of people just flocking to safety for thinking the same things right now, that it's a good place to be.
Absolutely.
Coca-Cola, KO.
So this is just a great stock, and this is what we call a dividend aristocrat. This is a stock that's been able to grow its dividend for 25 consecutive years, and we expect that to happen again this year. The company released earnings earlier in February, their fourth quarter earnings, which were generally very good. They beat analyst expectations both on revenue as well as on earnings. The stock pays a 3% dividend. Just a great stock for a long-term investor's portfolio.
Okay, what about General Mills? And I guess I'm going to throw in with these 3 names too. These are all U.S. companies, so I think people have to think a little bit about currency at the same time, but I digress. General Mills.
Yeah, so General Mills is a consumer packaged goods firm, probably best known for their cereals, but again, a consumer staple stock. And again, this is a stock which has done very, very well in the first 6 weeks of the year. Stock has a great dividend, around 3%, has grown their dividend every year for the last 10 years. So again, it's a great place for someone to put some money who's looking for some safety and security in the market.
Now, I noticed, and you've given us 4 names, I should say, and there's 3 U.S. names, but there is 1 Canadian name that does make it, and it's Fortis. Again, Fortis, the utility firm. I'm sure a lot of people who are watching know the company. Why is this an interesting stock for you right now?
For a number of reasons. I think Fortis has been in the news recently with a big acquisition they've done, a company called ITC, a big U.S. electric power generator in the Midwest. So to me, that acquisition is interesting for a couple of reasons. I think number one, it says that to have done this acquisition, Fortis sees some value in the U.S. market. So the valuation that they paid, they feel is worthwhile. But it also speaks to me to the company's position on their own business, that they obviously feel that their own business is very strong. This is a very conservative, very well-run company, and I feel that they wouldn't have done this acquisition had they not been very, very comfortable with their own business. So just Fortis in general, I mean, this is a company that's been around for quite a while. It used to be called Newfoundland Light and Power. Very, very conservatively run, pays a great dividend, 3.9%. Very strong track record of growing revenue and earnings. And as I said, the acquisition to me speaks to the confidence that management has in their own business.
Well, Peter, some great ideas for people perhaps who have kind of been chewing their fingernails as they watch these markets. So great to have you here, and we'll look forward to see how these do if they perform like the last one, which was great. Peter, thanks so much.
Okay. Thanks very much. Thanks for having me.
Peter Ashton, Vice President at Recognia, and he joined us from Ottawa.